Good morning, friends. Welcome to Adda 24/7. We are in selection MCQ series for BFM, and today's topic is operational risk. Okay, yesterday we have covered quantitative, then we had covered qualitative. So, two important aspects of this RBI's policy are covered over here. So, watch those videos also, plus watch today's video because today is for operational risk, very important part. Okay. There are three types of risks, right? Which are those? Type in the comment section. Which are the three risks considered in Basel? Everyone, type fast. Basel 2. Which are the three risks? Type fast. It is credit, correct. Market and ops. Okay. Okay. So yesterday's homework was the functions of derivatives are. Why are derivatives used? Derivatives are used for, it is useful for providing flexibility to the market products. It is an important tool for hedging market products. A and B and none of the above. So flexibility to the market products, that is also a point. Flexibility means if I am having the hedging tools or derivatives, I can be rest assured. So I can take more difficult calls. Similarly, second B also important tool for hedging. Hedging is an important tool in any commodity trading. It can be dollar, it can be gold, it can be stocks, anything. Okay. So both A and B is the answer. C is the answer. Okay. Let me mark this. Okay. Chalo. The risk of loss resulting from inadequate or failed internal processes, people and systems or from external events is called as dash risk: legal, compliance, fraud and operational. So resulting from inadequate or failed internal systems means what? My systems are failing means what? What do you mean by this word? Failing systems means link is not there. Even that is a serious issue. We see generally in our banks, no link. We just put a board, no link, and tell the customer, but that is a serious operational risk. Okay. Or there is a terrorist attack in your branch, or there is a complete electricity failure in your branch, there is a flood in your area. Anything is possible. Any by ways through which you are not able to service the customers, that is known as basically operational risk. Correct? Operational is the right answer. Okay, everyone, it is the operational risk. Okay, yeah. Next one. Which of the following is not an operational risk? Not, compliance, transaction, then legal and counterparty. Not an operational. Firstly, operational risk arises due to what? Due to failure of systems, error from the people working, then any external events like dacoity or any this flood, famines, anything. Okay, COVID situation, that also related to operational risk. Okay, so which of them is not? We want not over here. So what is the answer? Compliance, transaction, legal or counterparty. What is the compliance risk? Compliance risk means if my employees over here are not able to comply with the RBI guidelines, they don't submit their reports properly, so that becomes an employee problem. So again it is an operational risk, so that is okay. Transaction risk means when I do the transaction with the counterparty, I am not able to do it properly. Mainly this arises due to settlement risk. So this is also an operational risk. Legal, taking the documents properly, legal document, DP and demand promissory note. Then other is agreement, then continuing security. All these documents need to be taken by me as a banker, but if I don't take it, then who is erring in that case? Who is doing the error? The error is done by the human being. So again operational, right? But what about counterparty? Counterparty is a part of credit risk. Remember, credit risk, credit will be of two types mainly. Okay, one is country and second is counterparty. Okay, counterparty risk. So these are the two types of credit risks. Before going ahead, download Adda 24/7 app on your mobile. In this app you are getting all the free premium study materials, live classes, ebooks, tests, everything you are getting. So download it immediately. Okay. The risk related to non-performance of trading partners due to counterparty's refusal or inability to perform is called a dash risk. Liquidity, operational, counterparty, and none of the above. So what is the answer? That's what I wanted. I just checked. Many of you are typing the answer as operational. Why? Because topic for today is operational risk, but it's not the answer. Topic is given, but you need to clarify or distinguish between the operational and non-operational risk. So the correct answer is counterparty. See, here it's clearly mentioned non-performance of trading partner. Non-performance means that other partner or other party buyer of mine isn't able to give me the payment. So that is basically a counterparty risk, isn't it? Risk of legal or regulatory sanction, financial loss or reputational loss that the bank may suffer as a result of its failure to comply with any or all of the applicable laws is called as transaction risk, compliance risk, credit risk, systems risk. Now, have you seen this risk, compliance risk? How many of you have seen this compliance? Give me the example of compliance risk. Any bank which has been fined recently, any bank which has been fined recently, who can give me the name of that bank? Compliance risk. Any latest case? Okay, which is the latest case? Just I'll wait over here. Let me see. Okay. Yeah. Anyone fast. Recent case was with Mahindra Financial Services. Most recent case was with Mahindra Financial Services. Okay, so that's why remember you must always be aware of whatever is happening. Okay, so Mahindra Financial Services, there was a compliance risk. That's why RBI fined them heavily. Okay, so coming back, we are not to go into those details over here. Okay, but the point over here is we must be aware. So what is the answer? Yeah, result of failure to comply with any of the applicable laws. Logic, compliance risk, isn't it? Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting number 1 latest updates on JIB and CIB, and number 2 free YouTube series on all the subjects of JIB and CIB, and the marathons which will be conducted later will also be the part of this channel only. So that's why join it ASAP. Immediately join it. Okay, click on the bell icon. Whatever is available free, you must grab it fast. Risk arising from adverse business decisions, improper implementation of decisions, or lack of responsiveness to industry changes is called as reputation risk, strategic risk, operational risk, and management risk. Means improper decisions or improper implementation, unable to see the future. Do you know the example of this? Which one? I generally give this Nokia phones. Just remember the period 2006. Okay, roughly, yeah, 2006, yeah, 2006 to 2008 or 9, let's say. Nokia, each phone was Nokia. Everyone who was having the phone was having Nokia. Where is Nokia now? Gone. Why? Because they lack of responsiveness. They didn't see the future. Android was coming, it was capturing the world, but Nokia, no, gone. What is Kodak? Anyone remembers that Kodak ads? Kodak company, Fujifilm, Kodak, all those camera companies, Nikon, where are the camera companies now? Even though these camera companies have shifted their business now, but main problem was these filmmakers, Kodak, gone, right? Because now where are the films? Who processes the photos? What about the photographers? How many photographers are still running the shop? Gone, isn't it? So this is known as strategic risk. If you don't foresee the future, so same thing will happen. Okay. The major types of business risks include all of the following except means I don't want what is the right answer. I want the wrong answer. The major types of business risk include all. So which of them is not a major type of business risk? Product pricing, diversification, credit risk, and all of the above. So which of them is not a business risk? So product pricing, yes, it is a business risk. If I price it wrongly, if I price it above the market, then nobody will purchase my product. If I price it below the market, then I'll be suffering the losses. Diversification, if I diversify into unwarranted business or unknown business, gone, isn't it? If I diversify in some known business and execute it properly, then I'll definitely gain, right? Credit risk is altogether different. It has nothing to do with business. Credit risk means I give the money to somebody and that guy doesn't pay me. So this is not the type of business risk, and that's what we wanted, isn't it? Now today's homework. Credit risk is what? The risk that the firm's borrower will not make the promised payments. The risk that the firm will not be able to get the credit from the lenders. The risk that the firm will not have sufficient funds to make payments to its employees. The risk due to changes in output and input prices. So you check it over here. I'll give you tomorrow the answer, okay? So it is very simple, okay? You can directly see the answer. Okay, let me come to these batches. Power packed revision batches and video course batches, both of them are available. If you have time, I would definitely suggest you join this power packed revision batches. All the important numericals, objective questions, case studies, everything is covered. If you this video courses batch, if you don't have time, bank pressures, we have all the sales target now, huge meetings available. So in those meetings you don't get time to attend a fixed batch, so there you can go for the video courses batch. Okay, you get ebooks over here, tests over here, everything you get it. 80% off is going on right now. Use the code Y432. Okay, so how to use it, let me show this. Okay, go to Adda 24/7. Okay, let's go to Adda. I would suggest you download the app first. In the app, once you download, you are getting 1% extra using the coin system. Okay, go to Adda 24/7. Say this. Click on JIB and CIB. Then click on CAIIB 23. Okay, clicked. Look at this. The details. Click on this power packed revision batch. Okay, revision batch. You have seen this. All the details are given over here. Dates, timings, study plans, everything. Go through it. Also look at the fees part. Fees part 3999.75. Click on more offers. Put the code Y432. Y432. Okay. Look at this. This 80% off now. Actually the fees was 15,999. That has reduced to 3,199. Such a huge discount you are getting. So join this power packed revision batch immediately. You can join the video courses batch also. See this. Go back to Adda 24/7 front page. Okay, click on CIB again, CIB 23. Okay, now you will see the batches. Scroll down, down. Yeah. See this. Video courses. Click on this. You'll see the video courses over here. Again, go through the details. Topics are given. There is no timing to this batch. It's your own timing. Okay, go through it. Click on more offers. Put the code Y432. Y432. Click on apply. Now look at this. 80% off. 22,999 was the original fees. It has reduced to 4,599. Such a huge discount. Go for it right now. Okay. Tomorrow I'll be back with another series. Till then, keep studying and do join either video course or the